Welcome back. You're watching Stockwatch with me, Julieta Televi, and joining me to take your questions this evening are Chris Reddy from All Weather Capital and Devin Shutte from the Reddy Group. And if you'd like to send questions, please email stockwatch@bdtv.co.za or via SMS on 41392. Devin, Chris, good evening to you both. Chris, if I may start with you tonight, it was a pretty flat day for the JSE overall. The rand was a bit stronger. But are we in sort of the July lull? We've had the results. We've had the excitement of our government of national unity and the share price surge that sparked. It's a Northern Hemisphere holidays. Is it natural to be a bit flat at this point?
I think that's probably a good way of summarizing it. I mean, it's also quite a quiet period from a reporting perspective as well. So we don't have any results on the go as well. And then last week we had quite a few holidays as well, both in China and even in the US. There was an election in the UK as well. So maybe that's part of the factors. I mean, as you mentioned as well, very quietly on the JSE, about 14.5 billion traded for the full day, which is quite light when you think we're probably averaging 25 billion over the past couple of weeks post the elections. As you mentioned as well, rand was quite strong, so that weighed into our resources shares. The spot commodity prices were also quite weak on the day, so you had a double hit coming through into many of our resources. And apart from that, nothing much on the go with regards to financials, industrials, and the likes.
Yeah. Devin, so if this is a moment of pause and you were taking stock, would you hazard to offer us any themes that you think are going to be important in the next couple of months? Or, I mean, have you got a sense of where we might be headed, or what you would be offloading or buying at the moment?
Look, I'm just grateful for an opportunity to catch our breath. It's been an absolutely manic year for investors with, all the event-driven things that are happening, whether it's on the monetary policy side or the elections that Chris was mentioning. I mean, it really has been a very, very noisy year. But I think, in the times we've chatted this year, Julieta, the underlying theme still remains, and that is around monetary policy. We're starting to see those global central banks kind of diverge. And I think what's going to happen with the remaining central banks who haven't started to ease yet is going to dictate a lot of their direction probably for the next half of the year. So, I mean, we're eagerly waiting for our interest rates to get cut. I think increasingly now we're looking like a more, let's say, controlled inflation environment. And I think there's an increasing possibility that our Reserve Bank could move ahead of the Fed in starting to cut. I think a lot of the inflationary pressures are not on the demand side. So, it's going to be interesting to watch. I think the Fed is still the gorilla in the room. Powell still hinting he's only going to cut in November. I think the data increasingly look like that could be September. But as the market kind of twos and fro's and second guesses that, it's going to remain bumpy. So, to your question, if it's a quiet week and a quiet day today, we'll take it.
Yes. Chris, would you be putting any good money on interest rates, maybe the quantum of interest rate cuts that we might see this year? Do you think we will see any in South Africa? I'm not talking about the Fed, because it would have I imagine a fairly profound impact on indebted South Africans who've been under the cosh for a very long time now.
Yeah, look, I think the Reserve Bank governor was interviewed last week on one of his trips. It did seem to a point as if inflation is under control within SA. I think we're probably going to follow our cue on what the Fed does later on in this year. I mean, based on the jobs data that came out on Friday, it does seem as if the market is expecting the first cut to come through by September. So maybe we get one or two cuts out of the US, and then the SARB follows through as well. I mean, as you're saying as well, it does point to some kind of support for the consumer plus our fixed income market. If you look at what's going to happen later on in the year with the two-pot system, that also comes into play in September. So rate cuts plus some additional help from a cash perspective with whatever consumer has saved up that they can tap in as part of that cash portion. Some respite there.
Yeah. Okay, on to questions. And a viewer says, I read an interesting mail in the Financial Mail regarding the JSE Limited, and a shareholder asked the panel why the company is not buying back shares. The share price of the JSE Limited is effectively halved since 2018, and the response left much to be desired. Can the panel recommend any 4 companies besides Naspers that have initiated share buybacks, the natural assumption being that sustained buybacks should at some point trigger a re-rating in the share price? Devin, can you think of any offhand, and is that the natural conclusion?
I'm not sure if it's a national conclusion. I know Chris was looking up a list for us, but I think oftentimes buybacks are maybe a misunderstood tool that investors really need to look at quite carefully. I mean, there's the very vaunted Naspers buyback happening at the moment. It's probably the largest that we've ever seen on the JSE. But effectively, you know what a buyback is it's a company using their own capital to reduce the number of shares available out there, and it's a fairly low risk alternative in terms of capital allocation, as opposed to going investing somewhere else or even distributing in the form of cash. And yeah, we're big fans of it. We think that it doesn't fundamentally alter the business, but increases shareholder value quite significantly over time. So yeah, we favor it, and it's one we watch closely to see what companies are doing there.
Okay, I mean, off the top of my head, I could think of Lewis, which had a sustained shareholder share buyback, and I think Clicks did as well, didn't they? Chris, are there? What other companies?
Just to Devin's point as well, I mean, we're quite big fans of buybacks. I mean, it's quite a simple way of analyzing it. If the company doesn't have better use of organic opportunities to use that cash, we believe that they should be buying back their own shares. And it's a simple maths around what is more accretive for shareholders in the long term for us. So big fans of buybacks. Apart from Clicks, which is an ongoing buyback that they've had for many, many years now. And you've also mentioned Lewis. I think Lewis is a great example of where management are excellent capital allocators. So you're getting a 10% dividend yield for owning the share. Plus they've bought back almost 39% of the shares outstanding over the past probably 3.5 years since they started that buyback program. So I mean that's probably led to a over 100% return on Lewis in the past 3 years. Outside of those 3, I mean the other ones that I can think of are Netcare, good buyback on the go there. Okay. Attack, Datatech, Spear, Spar. Not Spar, sorry, Spur is the other one. Spear and Spar are the other ones.
Spear and
Spar.
Spar, yeah. Spar.
Not Spar.
Spur.
Yeah, and Spur.
That is very confusing. Okay. So of that list, are there any that you guys would favor? I mean, Devin, just because Netcare, Attack, Datatech, Spear, or Spur were buying back their shares, would you automatically go for any of those?
No, not automatically, but I do think it points to what Chris was saying is around the capital allocation expertise and the way management looks at it. And out of that whole list, Lewis is actually one that we hold for clients, and we're very big fans of that management team and how they've been able to do it. 100% return plus that 10% dividend in a really, really tough sector. Just speaks to the competency there. So yeah, that would probably be our pick out of the ones we discussed.
Yeah, Chris, are those shares on a watch list of yours because it's something that would trigger maybe your own interest in buying a share? And I mean, of that list that you mentioned, are any particular favorites?
So Lewis has been one for us. Datatech, I think that entire list that I gave you have been shares that we own or currently own in the portfolio.
Okay.
Yeah.
Okay. All right.
It is something that we monitor very closely.
Okay. Then a viewer asked a technical question. He says, or actually a couple of them. He says, how would the panel recommend a South African private individual access the Hong Kong Stock Exchange? That's the first question. And then let's start with that. Chris, sticking with you, is there an easy answer here?
So the 2 ways that I thought about that is you can potentially buy an MSCI China ETF. So I think Satrix has got one of those. If you want a basket of exposure into China, so via like looking at Tencent, JD, Alibaba, and the likes. The other option is if you use your foreign allowance and then move that into an offshore brokerage. If you want to select your own shares to manage as part of that portfolio. Devin, any other ways you can think of there?
Yeah, Chris, those are good. I think the easiest way, if the viewer is looking for direct stock exposure, they're going to have to externalize money and buy it off the Hong Kong exchange. There are some managed funds that allow you to do it. The one that we actually own for clients is the Prescient China Balance Fund, and they own a lot of onshore Chinese companies that the viewer would get exposure to there. So that could be quite compelling if they want to do the management for themselves, yeah.
Okay. Then the second question the viewer had, also a technical question. He said, how would the panel recommend a South African private individual, in other words, a retail investor, access data from a JSE company that they're not receiving? Namely, I want to know the occupancy per hotel, not aggregates, for City Lodge. I have emailed them to no avail. Is this something that you would expect to get from a company, sort of this granular detail, or is it something that you would actually have to wait for the AGM and presume, and you would need to be a shareholder in order to pose these questions to a company? Going back to you, Chris.
I think it's going to come down to whether the company wants to disclose that information to the broader market, because I don't think they'll give that level of detail to one individual shareholder if he's asking for that. But I think if you look at just the tourism stats overall, it's depending on each company's own disclosures. Some of them do disclose at an individual asset level. I'd probably say go via the company again, whether it's going to be IR or even write a letter to the CEO. If that doesn't work, then pitch up at the AGM and ask the question. I think every shareholder is allowed to actually ask questions at the AGM.
Yeah. Devin, you are allowed to ask questions. Do we expect to get sort of satisfactory answers? Not always. I feel AGMs can be quite unsatisfactory, actually.
Yeah. I mean, the unfortunate reality, Chris is spot on, is that the company will only disclose publicly what they want the market to know, and they've got a right to withhold certain what they could call, I guess, intellectual property details there. And if they wanted the granular detail on their assets to remain private information, then you wouldn't get it. Unfortunately, I think often investors feel like they'd like more information, and there's that tension between them and the company, wanting to just get on with things. But I think your suggestions are right. Go through the investor relations. That's definitely your first point of call. And if not approachable, then the C-suite from there.
Quite an interesting question that we were sort of chuckling over, and it was at some point in the future, the holders of thin air will have to jump out of Bitcoin before it tanks completely, says the viewer. My question is, where will those who dump after the final pump early enough likely move their money? Gold, equities, or elsewhere? I suppose that means I'm not sure if anyone would agree that Bitcoin is going to tank completely, but Devin, you were keen to answer that. What do you think?
Yeah, I was. I mean, I guess the viewer is pretty clear on their position on Bitcoin as a potential investment. I think I've got a different view on it in terms of Bitcoin being a scarce asset. If you believe that the scarcity of supply that's controlled by the algorithm is intact, and we believe it is, then it serves a very nice portfolio insurance, similar to what gold can do in some respects. A digital gold, if you will, and we think that kind of sound money characteristics that Bitcoin has a place in portfolios. We don't think that crypto assets are necessarily the be-all and end-all, but we think that crypto assets and the underpinning blockchain technology is something that shouldn't be dismissed, and although probably still in its infancy, has an investment case behind it.
Okay. Chris, are you in the Bitcoin camp, or are you in the holding
I'm not
camp?
I'm not in the Bitcoin camp, but I don't have anything much to add to that there. I mean, just watching what's been happening over the past couple of days with that Mt. Gox liquidation that's been driving the prices lower because guys are worried about additional supply coming on board. I'm just not sure if it's that store of value that many have expected to be.
Okay.
This is my reservation on it.
Okay, on to another hard question, and then there are some slightly bigger caps to talk about, but psilocybin holdings. I shall stick with you, Chris. Could your panel indicate if investing in this company would be recommended at the current price? Any info on this would be appreciated, but I don't know if this is one that you look at.
I'm going to be of little use to this one here, Juliet. I mean, we obviously saw the launch last week. It's not something that we actively follow, so I can't give you a comment on it.
Okay. Devin, I think you two, we ascertained that before the show, so.
Yeah, I mean, look, we looked at these cannabis producers and kind of value add companies a while ago. There were some trackers in the US. I think one of our big reservations is just in terms of the ease of supply of cannabis, not particularly hard to grow as a product, and in terms of value adds, also quite easy. So not a lot of IP, not a lot of moat in there, and so we think as a result could be quite difficult to get pricing power in this industry.
Okay. Then on maybe to a somewhat, well, I don't know if easier question, but the viewer says, I'm considering including a REIT in my portfolio, being a real estate investment trust. Scanning through the different REITs, I kind of like Vukile. I'd like to know from the panel if Vukile is one that they would buy, and whether it's still a good entry point to do so. Chris, if you've had a look at some of the property stocks on the JSE, A, are you considering any, and B, would Vukile pop out for you?
So without disclosing my stock pick for today, which is also a REIT.
Okay.
But I mean, so Vukile has been one of the best performing REITs year to date. So very strong performance out of South Africa if you look at their most recent results. Plus Castellana in Spain has been performing very well. The question comes down to whether you'd actually pay up for the quality assets at a 8.5% yield, versus maybe dipping your toes in a slightly higher yielding asset with a bit more of a turnaround story. So I'm going to be talking about Growthpoint as my stock pick later, which is north of a 10% dividend yield, with some self-help on the go there. So that probably would be my choice. I think if you look at it from a foreign perspective as well, foreigners would probably look at the more liquid shares in our market, being the likes of like a Growthpoint or Redefine or even Hyprop. But my preference is Growthpoint currently. Good. Yeah, I'll give you more details at the Stockwatch portion of it. Yeah.
Yeah. Okay. Devin, your thoughts on Vukile? I mean, it has done quite well. So maybe, as Chris says, as the yields compressed, so it's a bit pricier than you could have picked it up a few months ago or a year ago. But would you still buy it?
Look, I would be cautious. I think with the running price that we have seen, I think with the REIT sector in general, you've got to be very, very selective and really understand the assets you're going into. I think we're in an environment of slowing growth, and hopefully, as we were chatting at the top of the show, some reduction in interest rates. So those could offset each other. So not a perfect environment necessary for listed property, but definitely starting to improve. Local listed property had a phenomenal last 12 months. But, whether there's going to be follow through, I think you've got to be very cautious, stick to quality, and definitely we're only really looking at the big players, of which Growthpoint is one of them.
Okay. Devin, sticking with you, Outsurance and Pepkor, any views there?
Let me take Pepkor off the top of my mind. Something we've been looking at quite a bit recently. Really like it. I think they've been able to navigate a really beleaguered consumer. I think this is a quality holding that will be able to weather the storm quite well. Cash retailer, which we do favor as well. And I think overall they've been able to grow market share, still showing price leadership there. So one we like.
Okay. Chris, your thoughts on Outsurance? You've got a fair spread of options for short-term insurance players in the JSE. So I don't know what you think of it.
So I think around about the current levels at about 47 Rand, it has had a significant run post the election news from SA. It is one of the firm favorites that are held by foreigners. So that probably explains part of this move up that we've had right now. So I think, like the point on the REITs, you've just got to be selective in terms of what entry point you have on some of these shares. Do you, instead of coming in at post what looks like quite a good bounce off the low 40s, which would have been a better entry, we would think.
Okay. All right. Then a sort of also a technical question. Can you please briefly explain how the JSE closing auction works? Devin, do you want to enlighten us?
Yeah, sure. Taking me back to my JSE Equity Traders exam, which was more years back than I care to remember. But I think the technicalities are pretty much remain the same. So you've got the last 10 minutes of trading from 10 to 5 to 5 o'clock where the closing auction happens. And there what happens is market participants are putting in orders, buy orders and sell orders into the market on the JSE order book, and a JSE matching algorithm runs. And what that is attempting to do is to strike a single price at 5 o'clock that will match as many of those buyers and sellers together. So what will then happen is, depending on the type of order you've put in, whether it's a limit order or a market order, that algorithm will try and match and settle as many trades as possible. I think there's some dark arts there, just like in the South African scrum, in terms of the different algorithms that trade in that, and various traders are looking to try and move the price just before it settles. But yeah, it's an opportunity for the larger institutions to really clear large volumes at a single price, and you often see those big block trades going through.
Which is why sometimes you see quite a lot of volatility or strange moves. Correct?
Yeah, that's right.
Okay. Chris, I shall move on to another question. And a viewer reminds us that British American Tobacco currently has a buyback on the go, but I wonder if any of us would consider it. And then also, what is the outlook for MTN? Is there anything positive? So starting with MTN, Chris, do you think there is anything positive there?
So I'll name a couple of positives. If you just look at what's happening with the African operations, there are talks on the go with regards to getting price increases in both Ghana and Nigeria, which will be supported from a top line perspective. They are also negotiating with IHS at the moment to renegotiate the terms of their tower leases, because as it currently stands, it is linked to dollars, and when you've got Naira weakness coming through, your operating costs just blow out. So that is something that could be positive in the near term if they can come to a good outcome on those discussions. I mean, apart from that, based on the most recent updates, SA is still quite pedestrian growth from that perspective. But if you do get some more news coming out of the new telecoms minister, maybe start getting some foreign interest coming back into the telco sector, that could be another positive for MTN. I mean, if you just look at the share price performance, it hasn't. All telcos have not been beneficiaries of the post-elections outcome. So I think foreigners are a bit of a wait and see in terms of can they actually get growth coming back. I mean, if you look at some of their balance sheets, the balance sheets they do have quite a bit of debt on the balance sheet, just given the nature of the towerco leases and the like. So if we start seeing interest rate cuts coming through as well, that could also potentially be another kicker on the interest expense for many of our telcos.
Yeah. Okay, so you've enumerated a couple of positives. Devin, would they be positive enough to convince you to buy MTN shares?
I'll add one more, and that's their fintech operation. It's one we really like, and that's showing really robust growth there. But Gillette, this company really knows how to put you through the ringer as an investor. It's volatile, and there's just, in my mind, a lot out of the company's control, whether it's foreign regulators, whether it's foreign tax authorities, whether it's foreign currencies. It's really difficult. So it's encouraging on the towers that they making some progress there. I view these companies as kind of utility, so it's nice to see a growth driver coming in with fintech. But yeah, it's not for the faint-hearted. One we're just watching at the moment.
Okay, very quickly. Devin, what's your stock pick this evening?
Sure. So I'm going to actually stick with the blockchain theme. It's a US ETF. It's called Amplify Transformational Data Sharing ETF. They could work on the name there. And really, this is an actively managed ETF giving you exposure to listed companies that use blockchain technology. Now, we think blockchain technology is pretty transformational. It can solve real-world problems in ways we haven't seen before. And I think it's largely been overshadowed by the AI mania. It's been performing really well, but maybe not at kind of NVIDIA pace. So one that we think warrants a closer look and potentially a responsible allocation.
Yeah. Terrible name, but maybe a decent bet. And Chris, maybe just a last comment on, you mentioned that Growth Point was your stock pick. You said the yield on Growth Point is 10%. It's interesting to me that it doesn't. It's got a considerable office portfolio that's been really bad for it. Does that not put you off? I mean, what are the positives for you in Growth Point?
I think so. Starting off with the office point, I mean, I think we probably passed the point of maximum pain when it comes to the office portfolio. If you just look at the reversions that they're getting on these office leases that are expiring, it's not as negative as what it has been in the past. So if we start seeing interest coming back, international companies looking for space again in South Africa, you're probably going to see some uptick, some improvement coming through in the letting in that office space. I've mentioned previously around just how well the waterfront is performing. I mean, I think given where the currency is right now and how cheap South Africa is still relative to international destinations, you're probably going to see still good trade coming through out of that waterfront precinct. Retail is performing okay. And I think based on the most recent pre-close, the management team is being a bit more proactive when it comes to actually selling off the tail in the portfolio and refocusing their attention in terms of the good assets and just cleaning up the portfolio in general. Okay. Internationally, Gazi is performing okay. Capital and Regional, most of the pain I think is in that portfolio, and same with Global Worth as well. So we quite like Growth Point going forward. If we start seeing lower bond yields as well as interest rates start coming off, that will also be an additional kicker going into 2025 for Growth Point.
Okay, James, we're going to leave it there. Thank you very much for your insights this evening. Much appreciated. Chris Reddy is from All Weather Capital. Devin Shutte is from the Rubert Group. And up next, we have The Close. Stay with us.
Thank you.